Hello guys, in this video I will try just to give you a summary of the reasons why the energy sector has fallen down. Now, you might think that I will speak about the fundamental reasons. Now, you can go online and you read because of this, because of that. But the real thing is, when a lot of mutual funds who hold the energy sector, okay, since they have made a lot of money these 2 years or 3 years from this sector, they know that the market is saturated. Saturated, it means a lot of people, when they see that it's 1 year or 2 years, the trend is so big, they don't want to buy. That's why at one point they begin to sell. Now, why is that? As I told you, the market is saturated. Not a lot of people are willing to buy, and they don't want to push more and to buy more in order to make this sector attractive to other mutual funds or to the public. Okay? But the hidden reasons no one knows. It's the market. Okay? It has a relation with politics. It has a relation with Wall Street guys. It has relations with outside politics. You have heard a lot of stuff. Why is that? Why is that? But for us, try to be logical. For us, it's just the price. Okay? Something goes down. Okay. If you are going to short this thing and to wait for 1 month or 2 or 3, or you make a big position and you wait, and you are right, you will make a lot of money. Okay? This is what matters. Money in the stock market. What's happening, you will never know why in terms of true reasons. And I ask you, how many traders, how many day traders, how many swing traders, how many investors, how many mutual funds are in the stock market? There are a lot. How each one has his own reason. For example, I ask you, why you buy stock? You have your own reason. Either you know the reason or you don't know, or you gamble and you buy stock. Okay? You have a reason in your mind. That's why you buy a stock. Okay? Now, when you sell a stock, it's the same reason. Okay? But if we have a lot of traders, a lot of swing traders, a lot of investors, a lot of mutual funds, banks, pension plans, hedge funds, we have a lot of mixture of things. But when the big guys decide for something, now, you say, what are these big guys? What are they? Okay, I don't know who are these big guys, but I understand they can move something up or down. This is what we call the big guys. I don't know who are they. Okay? Most of the time they are mutual funds. Why do they do this? Why at the same time everything goes down into a sector and they crush it? Okay? This has a big reason. But no one asks why. Okay? Because after 2 months or 6 months or 1 year or 2, they announce that that mutual fund has sold 10 million or 50 million shares from some companies that are energy stocks. Okay? But after, when everything is done, so they give us what we call the past, or they give us history, something that it is past actions. So you can't use them. Okay? If someone is selling today and he wants to sell 100 million shares in many companies, energy companies, and he will tell the public, oh, okay, all the people go, even someone who doesn't know how to short the market, he will go and learn by his broker and say, okay, I want to short this stock, what should I do? Okay? And all they make money. But understand that the market is secrets. Everything is secrets. The only true fact about the market, which doesn't lie and you should rely on it, is price. Price doesn't lie. Okay? Last year, the energy sector has reached the peak. And I have made many videos explaining to you each index when it stops going up. Most of them they stop. Most of them they stop in the same day. So here, some people they say, oh, there is conspiracy. There is Okay, yeah, okay, there is conspiracy, or there is something else. Okay, he tells you, okay, I sold my shares, and that day, coincidence that other mutual funds have been selling on the same day. Okay, I don't care about the other people. Okay, and you can't take these people to the court and you say, oh, you have hit the market at the same time. Okay, it's Wall Street. No one will take Wall Street guys to the court. They will take you, not you, because of the power of money. Now politicians, they don't want to put their nose in Wall Street. Understand that Wall Street is where the money is. The government has its part. Anything sold with a profit, the government is taking part of it. So they don't care that much. Okay? Now for you, like a small trader, like me, small trader, like everybody else, which are called the retail traders or public. I use the word public. It's better because the public is just the people who have no information about what's going on inside, like companies or anything that it is very, very important. You don't have access to this information. Okay? But we are lucky. I'm telling you, the public is more lucky than other people. Why? Because the price, okay, tells you everything. When for me, I was trading last year and the other year, I was trading energy stocks a lot. And I make videos about this 1 year ago, 2 years ago. Okay? Why I was trading a lot energy stocks? Because they were going up. Now you say to me, how do you know? Okay, I have just used the stock screener, and it shows me the indexes or the index or the sector that it is moving up. So in this index, you will find stocks. You take the leaders who are strong, and you will see that they go so fast and they push the market up and up and up until those stocks stop going up. So you see in the market, you see it. In the chart, you see everything. Okay? Those people who are beginners, who are gamblers, who they don't understand the game, they will never understand anything. Why? Because there is confusion. Stock going up today, others going down, and you are confused which to choose, which to leave, because you don't see the big picture. Now, in one day, the energy sector, oil and gas and all the stocks, they go down. Okay, in price. I ask you the question. In those who believe in fundamentals, what did happen to these companies? Okay? These companies are nice. They are good. They are doing what they are doing for many years. There is no change. So why in many years these kind of stocks go up, and they make too much money in terms of stock market, and then last year and this year, when they begin to go down, they lose a lot of money. And this sector is crushed. Okay? It's crushed because of the sell-off. A lot of mutual funds sell huge amounts of shares. But they can't sell it in one day. It takes months. As it takes months the stocks to go up, it takes months to go down. But whenever you begin, if you are just into the market and you follow the indexes, you find the stocks, you use the stock screener, okay? You will see what's going on. Like those guys, for example, who are right now my subscribers, they begin to see industries that go up. A lot of stuff. It's very easy because it gives you the sector, it gives you the industries, and it gives you the number of stocks that are going up the resistance line. Okay? So their number, before, you don't find one stock that's going up. And then, in few weeks, few months, you begin to see 10, 20, 30, 40 stocks go on the same time, on the same index, the same sector. It means that this stock, a lot of mutual funds, they are buying from this kind of stocks. The stocks can't move by themselves. It means there should be a big buyer. It's not me or you who can move a stock. Okay? Except for the penny stocks that are 1 cent or 2. Okay, you can move it. You put $100, $200, the stock moves up or down. Okay? So I'm not speaking about this. I'm speaking about stocks like Facebook, or like you need billions of dollars to move the stock $1 or $2 billion each day. Okay? So you need someone who has money. Who has money in the market? Mutual funds, pension plans, banks, big investors. Okay? Those who have a lot of money to put. And when they put some money, it's not an easy game. They don't just put money today. They are not doing swing trading as we think. No, they are doing things that lasts at least 1 year, 2 years, 3 years, 4 years. Okay, they invest in something, they push it. When stocks begin to go up and mutual funds begin to buy, they don't buy. They need our help. Because how can they make money? If they buy, the stock goes up. But if we buy, the stock will go up and up, because we are a lot. We are millions of people, but we have little money. But this millions of people, of traders, of investors, of swing traders, when they put their money, the stocks will continue going up by the help of the mutual funds. But who the first move the stocks? It's the mutual funds. Now, when the mutual funds begin to buy, I and all the people in the market, especially swing traders, and they begin to see something moving. There are what we call, I have explained this before, which is called the industry rotation. What does mean industry rotation? It's a very simple concept that I developed. What is it? It means mutual funds, they choose some index, some sector, and they put all their money in 1 year. And they see the next year, if they make money, they replace some stocks, they leave some stocks. This is what happened in the way business is done for the mutual funds, because they can just buy stock today and tomorrow they will sell it. Okay? They can't. They have rules. The government give them special rules to apply, so they can't just buy today, sell tomorrow. They are mutual funds. They don't play this game of day trading or something. Okay? But they need time to buy because they have too much money to buy. Okay? They have billions of dollars in their hands. You find, for example, you find a mutual fund. He has $50 billion in his hands. Now he should buy stocks. He should replace the stocks. That's why you see some stocks, they go up for 1 year or two, and then they get crushed and they go down. It's just because that mutual fund, he sells because he makes profit. Or the stock doesn't move as he likes and he lost money in that stock. That's why he sold that stock. Understand that mutual fund do mistakes also. It's not always a mutual fund makes money. Some mutual fund, they lose money. And if you go online and you search the performance of mutual funds, you will understand that. This simple thing I will tell you. Okay, go to your 401k if you have one. What you should do, just check where you put your money into mutual funds and you will see the performance. Someone is 5% good, someone 10, someone 20. And you find one is -7, one is -15, -20. Now this guy, this manager of this mutual fund, is losing a lot of money. Okay? Now, we go back to our story of why energy stocks go down. You know, a lot of mutual funds, they sell off this sector. Now why? Because they have made money. It's too much money there. And they decided, I don't know if they know each other, these mutual funds. We don't know. And they begin to sell off at the same day and the same week, the same month. So I don't know. No one knows. And no one can know this information. Okay? So, but for us, here is the thing. If you are following an index or you're following a sector by itself and it's a stocks, you will see this on the chart. I have shown you in some videos before when the first day the index begin to go down. It's very easy. Just go to the chart. The index stops and it's going down. Okay, that day is the day. It's very simple to locate it. Now, how you tell me, how do you know that it continues? Yes, I follow it. I follow and I see that it continues. It makes a first low, then a second low, then third low. It happens the same as Twitter do. I make a lot of videos of Twitter because it has the same thing by itself. Okay, it goes down by itself. Now, you tell me, for example, someone asked me before, when they stop. I don't know. When they stop, there should be a move up into a new trends. They will be smaller than the big downtrend. Okay? It's only the future that tells us. So, as we can see, gas is so low right now. Okay, we thought, some people think that these stocks stopped. Okay, some of them stopped, some they don't stop and go down and more and more. And maybe I'm telling you that maybe there are a lot of companies they go bankrupt because they lose a lot of money from stock market. Okay, and when they sell oil or gas, they can't make money, so they should stop. Because you can't do business and you are losing each year money, you lose each year money, so you go to do bankruptcy. So, understanding the fundamental reasons why this sector goes up, why it goes down, take it easy. Now, how you take it easy? By the price. Price is going up What does it mean? It means the demand for this stock shares is beginning to be high. It increases. Now, when the demand increases, the market price of these stocks goes up. Okay? Now, in sell-off, the supply is too much. We have a lot of shares to be sold. That's why the price goes down by force of supply. Now, these two terms, supply and demand, they are facts of economy. Okay? In what we call liberal capitalist markets. It's the market which decide the price. It's not you. It's not the company that decide for its price. For example, a Twitter right now, let's say it is $17 or $18. It's not a Twitter who imposes the price of the stock to the public. Okay, no. Twitter was $74.73 before. Okay? Now it's 17 or 18 or 19. Okay? Why is that? Okay, a lot of people, they sold. A lot of investors, they sold. They say, okay, Twitter is not going to give us more money. So we sell it and we go to buy another stock. Another company that it is more reliable for its future. Because they don't see money in the company. Okay, the company is still young. Okay? Until the investors see that the company can compete with other companies and can make money. When they begin making money, those investors, they will come back and they will buy it. It's just a game. All what I say here is that stock market is a game. Stop searching and reading reasons. Why is that? And you take it serious that someone else online, like he has a blog or he has a YouTube channel or he is in TV, and he will tell you what is the true reason why. Okay? People are just saying whatever they like. If people believe them, it's okay. But for us, if you want to simplify things and take the headache from your head, you will be having no problem. You see the price, stocks is going up, someone is buying, I'm buying. It goes up, I'm right, I'm making money. The stock goes down, I'm losing money, I exit. I don't care what the people say, or what the companies say, or what the analysts say, or what other people online say, or the books say. I preserve my money. It's your responsibility to preserve your money. No one will do it for you. And the people online, each person say whatever he wants to say. But the truth is something else. Since we can't find the true reasons, if we have true reasons, okay, it doesn't help you make money. If you buy, for example, last year, if you buy energy stocks, whatever energy stocks, gas or oil or whatever, and you see that your stock is going down, you lose money, and you will be staying, okay, holding on the stocks and waiting and searching for the reason. Why is that? Why the price is going down? I know this company is doing good. Okay, I called them. I called the CEO. I called the customer service. Okay, and I told him, hey man, I invest. Because as you might know, in any company you find what we call investors section. Okay, investor, you can call them. Now let's say someone, he wants to know the truth. Okay, You call the company and you say, why I invest in your company. It's a good company. It's excellent. And you show us in your financial that you are okay. You are making money. Why the stock is going down? The customer service, the CEO has no clue because it is not in his hands. The price of the company is not in the hands of the CEO of the company or the founder of the company. Why? Because Wall Street guys decide. When they say Wall Street guys, it's just in general word, like for mutual funds, for banks, for wherever he has a hand, brokers, anyone who has a hand in the market. Big hand. I'm not saying we are small hands, very, very tiny small hands. But the ones that are big, they can move things. So stop searching for the reasons why. If you just accept that we have what you call supply and demand, when there is a supply, a lot of supply, the price will be saturated and it goes down. When there is a demand of something, the price will go up. Okay? Will go up. It's like if you have the idea about coins. Coins, the price is so high when the coin is rare. Okay? When it is rare, you find the value, the people, the collectors, they give it so much value. You understand that there is a coin. I just give you an example. If you find, for example, in 1944, 1 cent, which is steel, not copper, okay, you will have $100,000 in your hand. You say, how is that? How 1 cent is 100,000? How? It's 1 cent. How do you tell me it's 1 cent is 1,000? Yes, is the value. The value, because this is rare. You can't find easily. And you search all your life and you don't find it, okay? Depends on the value. Now, the value of a price of a company is based on who buys. If there are a lot of buyers, big buyers, the market will go up. See, for example, Google. Google goes into, from 100, when it began, it goes to $1,100. Why Google has gone from 100 to 1,100 in a few years? What makes Google? It's just because people like it. They see everything. They heard a lot of things about Google. Google is making this. Google is the first search engine in the world. Google is always buying some companies. Google buy YouTube. Google buy a lot of stuff. Okay? They invent new things. They are strong. They kill everyone. Okay? They kill all the other websites before, like Yahoo, like the other stuff. He became the first online. Now why? Because he's strong. But the people like the winners. That's why they buy it. That's why it goes up. Now if you like a loser, you will be a loser like the stock you choose. Okay? It depends where you are in the market. You told me, oh, last year I lost money. Okay. But if you buy this stock or the other stock, you make money. But you are with the loser and you stay with the loser. Now I ask you the question, why you stay with the loser? Why you don't search more? If you don't know how to search, okay, we have trainings here and there. Take a training and get to know something. Try to learn new things. If you stay like each year the same thing, losing money, 1 year, 2 years, 3 years, you lose all your money and then you close your account and then you can go to Craigslist, the rent section, and you begin to rent and you say, Wall Street, take my money, and there is a conspiracy in the market, and whenever I put money in my market, they short it, they are after me. And you, believe me, you have 1,000, 2,000, or 10,000, or 40,000, or 100,000. You think that you have money, but you are nothing in the market. Facebook, in one day, you can find 50 million shares traded. It means like $2 billion, $3 billion, $5 billion a day. It's, traded. It's just in one stock. Well, what about your $10,000 or $50,000? And you say conspiracy. Who cares about your money? Okay? So don't make hallucinations. Don't go rant against the market, because the market is just you and me and the other people, either big or small. This is the market. Each one plays its play. I buy, you sell, and then the stock goes up. I make money, you lose money. Okay? So in short, each year or two, you will find this, what we call an industry rotation. Okay? In the industry rotation, this is where I explain in my training level how to make money in the market. I explain how you make money. Okay, there are things that you should be aware of in order to make money. It's not just because when you buy a stock, you can make money or you can lose money. In each stock, you do. In each trade, in each transaction. But making money has to do with other things. These things you should know and understand. That's why I make a training called How to Make Money in the Market. Okay? Now, if you take everything as simple, you simplify things, you will see the whole picture of the market. Now, when you see the whole picture of the market, you begin to screen the market, okay, with a stock screener, or using an industry index. You begin to see things. And when you see things, you can make a decision to buy the leaders in each industry, and you can make money. Without this, you begin just gambling. Buy here, sell there, buy here, sell there, and you go everywhere, and each one tells you do this to make money, do this to make money, and then at the end you will not make money, because most of the people who are online, they don't teach you how to see simple things in the market. It's just the price. Okay? And these things are called skills, trading skills. You should learn them. They are not given to you for free. You should work by yourself and stay years, hit and miss, and you spend money, and then you begin to discover this. Or you get a training and you understand the whole picture, and then you can have a basic thing in your trading, and then you can ameliorate this through the years. Okay? So why the energy sector goes down? It's just because people sell off. Other people help them by shorting the stock each day for the whole year. Okay? It's just a matter of a game. Now, why they have begun to hit the market in one day? A lot of mutual funds, maybe there is one begin and the other they follow, because they have rules. You understand that mutual funds, they have rules to follow. Okay? If you want to understand more about the market, you should understand that the price moves because of the big guys. We as the public, we help them. Okay? But if you hold a loser in a stock, you hold it and you don't exit, they crush you, because these guys have billions of dollars and millions of shares to sell. You have 100 shares, 200 shares, 1,000, 10,000 shares. It's nothing. They crush you. And then you begin to wait until the stock goes up again. But it will not, even if it goes up one day or two, because the short sellers, they cover their short. It means they buy again, but they will short again next few days, since they see that there is a sell-off continues. Now, I have explained to you before the small correction that happens in 24th of August. This is the last day. After that, I make videos and I explain that there will be a move in the market, a move up. Now, this move up, the only or the most stocks that doesn't follow this move are energy stocks. Now you tell me why? Why all the market goes up again, and that sector with its industries, they go down? Is because it's a planned. This thing is planned from last year. They want to hit this sector to the bottom, and they carry out the plan. And a lot of investors, a lot of mutual funds, they begin to sell because they see that it's dangerous. It's dangerous. You are losing 5% of your money, then 10, then 15, then 20, then 30%, then 50%. Okay, man, you lose all your money. And who tells you that in next year or the other year, this energy stocks will go up? It could take many years until they buy it again. Okay? So you are not an investor. If you are an investor, it's your choice. It's your commitment that you do. But mutual funds, they invest, but they care about the risk. That's why a stock or an industry that hurts them, they sell it. With all the stocks, they don't care. Okay? Because if they don't sell, a lot of mutual funds sell, and they get hurt with the big losses in some industries. That's why, as I explaining why things happen, if in the future you change your mindset, you change the way to look at the market, that there is only supply and demand, there is the price going up or down, some people are buying or some people are selling off. Okay? Some industries are going down, some industries are going up. Now your job is to find things, industries and stocks that are going up. Now how do you find them? By using stock screener. And my training level 2, how to search for stocks using stock screener, or level 3, how to search for stocks using industries, okay, helps you understand the thing. Or you can just go for my membership subscription, and each week, each Friday, I'm doing one search, and I put a lot of videos explaining where is the money, which industries. It's very easy. You will see me searching, showing you where this money is going and who is. We don't care who is buying. Is mutual funds or big traders? I don't care. What I care about is stocks going up. I can make money. Okay? A lot of people, they have subscribed, and it's just to have a practice, a training practice to understand the market without fundamentals. You forget about companies, what they do, and this company is famous, this company is not famous, this company is big or small, this company. What are you looking for? Are you looking for money, or are you looking for to see famous companies to own? Oh, Oh, you speak to your friend. Oh, I own Coca-Cola. Ah, yes, Coca-Cola. Okay. In 17 years, this Coca-Cola the price doesn't change. Okay? So, you are buying a famous company, and this company doesn't go up, doesn't go down, it stays the same. Oh, I am like Warren Buffett. You know, Warren Buffett bought Coca-Cola, and he bought what's the other companies that he bought? Insurance companies like Geico. He bought it, so I own it. Okay, I own it. I will be like him, but understand that this guy Warren Buffett, he bought these companies in the 50s, 60s, 70s, when we have a big move of the market. If you see how the market moves in the 60s and 70s and 80s, you will never imagine how the market move. Okay? It's just because he came in a time when there is a big market move. Any stock that you buy, it will go up for many years, for 10 years, 20 years, 30 years, and you become millionaire. Any stock. Most of the stocks, I didn't say any, but most of the stocks. Now, this Warren Buffett have bought them long time ago, in the 50s, when he was young, this guy. But at that time, he bought parts of the companies. He didn't buy 100 shares like you, or 200 shares, or 500, or 1,000 shares. He bought millions of shares. He bought 10%, 20% of a company. Understand that. Stop this naive thinking that you can do like Warren Buffett, or you can do like that guy, like that guy. Okay? The situation is not the same. Okay? It's not the same at all. Someone who bought in the 50s and the 60s and the 70s last century, it is not like you when you buy in 2016. It is not the same. Okay? So he makes money because he bought on the right time, and he has money, and there is a big move. 3 things. Now, these 3 things you don't have. You don't buy on the right time, you don't have money, you don't have millions of dollars to buy parts of the companies, and you didn't buy in the 50s and 60s and 70s of last century. Okay? You don't. So why are you following people who have not the same thing as you do now? It's just because you want to show off to your friends. Oh, I own Geico, and I own Coca-Cola. I own this and that, and I'm like Warren Buffett. I'm making money, and but you see his account. He does not make money at any time. He just wastes his time. He wants to be his name linked to a rich or wealthy person. But this doesn't help you. Okay? Why you lie to yourself? Okay? If you want to learn, you should take steps to learn, either in investing or into trading. You should try to understand the game. That's it. Here, when I speak about investing, is the same thing. It's commitment. Okay? Commitment. It means you choose one company, or 2 or 3 or 4. You just study if this company will have a future, and just you buy, just you leave. This is what you call investing. But mutual funds are doing like half, doing swing trading with investing. They stay 1 year, 2 years, 3 years, and they sell. They rotate. It means they change the stocks. It means a mutual fund. Let's say a mutual fund has 20 stocks. You can see them online. If you go to a mutual fund name, you go to the stocks that he owns is public. You go and you see them. But he will change some stocks. He will never tell you when he sold the stock, and then the picture changed. They say, last 2 months, we have get rid of a company because we think that this company is not what we are looking for, and we bought another company. They will never tell you which company they are going to buy. But when they buy after many months, 6 months or 1 year, and the stock has gone so good, and they say, oh, we have bought a company and it was a success. See the chart. And when you see the chart, you see an uptrend, a nice uptrend. You see it. And you get tempted to buy. But man, you didn't buy like these guys last year. You want to buy on the top. And after, when you are going to buy, they advertise. They say, oh, this is the best company to buy. It has gone 70% or 100% from last year. And they begin to say good things about this company. Okay? Now you get tempted to buy it at the top. And then after 2 months, 3 months, they will sell it, and you lose money. You help them sell, because when they sell and you are buying, the price will be the same. So they will never use any money. For example, they get 70% profit from this company price. If they ask you to buy, this 70%, it goes to 72%, 75%, and they begin to sell very, very quick. Whenever you buy, they sell. Whenever you buy, they sell. It's not only you, but millions of people, because it is online. You find it in CNN. You find it in major economic TVs, major websites. You find the announcement. Oh, it is the best company. Just buy. See the proof. See how this company has made, what has made. See the earnings. See that. You get tempted to buy, and then you buy because you believe that someone else wants you, a mutual friend wants you to make money. So you buy. After 1 month or two, maybe you invest, and then you begin to see your stock going down, and you begin to lose money. And then you will see that after 5 or 6 months or 1 year, they announce that this mutual fund, they announced that he sold the company. So who bought the company? It's you. Okay? You bought the company. Who sold the company? It's a mutual fund. Now why he sold it? Because he has profit. Now why you buy it? Because I will not say they lie. No, they tell you the truth about that time, but they don't tell you their intention. What will do in the future? Because they tell you the past, and you are buying based on the past. You are not buying based on your prediction for the future. Okay? That's why you lose, and then they make money. And you find this online every time. And sometimes a lot of people, they buy this mutual fund, they buy stocks for a long time, 1 year, but the stock doesn't move that much as they like. So they pay millions of dollars, analysts that you see online, that you see on TV, always, and they give a good buy. That's why you see it on Yahoo, or you see it in websites. You find what the analysts say. They say buy, hold, buy. Okay. Oh, these guys, they understand better than me. They know the market. They know the ins and outs of the market. So they know. Okay, I buy. Now, you buy, in other people, they make profit. But few weeks, when the other guys see a nice profit, they will sell. And they will leave you with a stock that's going down because no one buys it. And you go to analyst, and they say to you, hold. It's just a small correction. of the stock, small correction. It happens in the market. A hold. Then you hold. Then you lose 5%, 10%, 20, 30, 50%, 60, 70%. And then you realize that all this, what you see online, is a lie. And then you sell with a big loss. And then you lose all your money. Most of your money, you lost it. That's why you should learn in order to take your own decisions. Don't let anyone influence you in decisions. Understand first, learn how to trade or to invest in stocks, and then practice as much as you can, and then commit money and begin to trade. When you make a decision, you understand why you make this decision, why you buy. Okay, you understand it, and you understand when you exit, when the stock is not giving you money. Because why we are here, why we are in the market, understand it's a basic idea. We are in the market to make money. We are not to get fun, okay, or to gamble. We are not gambling with our money, okay? We are doing business in order to make money, not to lose money. Here, when I say lose money, you lose a little money in some trades. This is natural. But when we say lose, I mean the big losses. When you wait until it's too late. Okay? When it is too late, you will lose a lot of money. In the market, stocks are going up, stocks are going down. It's a chaos. The market is illogical. That's why some people who want to use a lot of logic, especially those who base their information on fundamentals, they are always confused. They say to yourselves, man, this energy sector, I know some companies, they are doing so well. I know these companies. I have done business with them. I know them. I see their financials. They are excellent. What happened to a stock, a company that it is in the energy sector, which is $100, and now it is $30? What did happen? What did happen to the company inside the company? Does it have problems, or there is no oil, or there is no... No. The company is fine. But the stock is going down because of some guys who sell off or they short the stock. So the game in the stock market, it's not the game as outside the market. They are two different words. The stock market is a word by itself. It's like something you might know. It's like Walt Disney. When you go to Walt Disney, it's another word. You enter inside, you play games, okay? You go to slides, you go to do a lot of stuff with the kids, okay? You imagine things, you find things that it is imaginary, but you find them there. You live in another world. So the stock market is another word. That's why I give you an example of the stock market that doesn't exist in other businesses. How you can sell people's shares without their permission? Someone who wants to sell short, the broker give him shares of other people who hold the stock, and he sell them. If the stock goes down, he will make money, and then he buy them again when they are low or cheap, and he make money from the stock. Where have you seen this in the real world? In business, it means if you are doing business. Where have you seen you sell high and you buy low? Okay? And you make money. It doesn't exist in another business than the stock market, because stock market is a game. Understand that it is a game. If you don't understand that it is a game, you will never understand the stock market, and you will lose money, as millions of people lose money each year. Okay? So if you want to just to understand, I ask you a question. Go online and search how much money this sector, which is energy sector, has lost. It's maybe billions or trillions of dollars has been lost. Now, who has taken this money? It's people in the stock market. They are not outside. They are in stock market. Like me, like you, like everybody else. All we are in stock market. Some they took this trillion of dollars. Okay? They took them. They do trades. They do swing trading and they do day trading, and they took the money. When they short, some people sell off. That's it. Now, go out of the stock market. Tell me, where have you seen you can sell some people stuff and then you buy it when it is cheap and then you get the difference and you make money? Where have you seen this? And you tell me, for example, how the brokers give my shares that I hold and gives to these guys who are short sellers. Okay, this is the market. You can't stop them from doing what they do. But because you have only few, but they can take these shares from mutual funds. They have millions and millions of shares. And you understand that there is a complex things. Is just because of the rules of the mutual fund that help this kind of stuff. Okay? It's complicated. It's all complicated, but it's the game. This game, it has, if you can understand, this game of stock market begins in Europe centuries ago. Okay? It's just a game. We set rules, and it is the same rules. Going long and shorting, it has always existed. Stocks go up, stocks go down, it always existed. Stocks get listed and get unlisted from stock market, it's always the same. Okay? Some people make money, some people lose money. It's the same as last century, 2 centuries ago, 5 centuries ago, in Europe and some other kind of countries abroad. It's the same thing. The stock market has never changed. The market has never changed. The people, they can change, and the people with their behavior, they don't change. That's why beginners in 2016 or beginners in 1901, okay, beginners at that time and this time, they are the same. They do the same mistakes. Okay? So even technology has changed nothing, because the problem is us. It's not the market. The market is always doing what it is doing. It goes up, it goes down. Okay? It's us who decide when to enter. It's us who decide when to exit. Okay? So it is us the problem, not the market. So whenever you are losing money, it is you the problem, not the market. Don't blame the market or rent or say it's other guys, they do conspiracy or some stuff like this, because you just waste your time. You want just an excuse for your failure. Okay? You want excuses for your failure instead of learning how the market works. And then you get the big picture, you do practice, you have some money, and you begin trading right. And then you begin to see the money, to see opportunities, and then you buy, and then you make money. Like the few people who make the money in the market. Now, continuing like this, gambling, someone tells you do this, you lose money. The other tells you to do this, you lose money. The other, you go Okay, it's always the same. Because if you don't know the truth about the market, how it works, you will never make the money. Okay? Yes,